The recent rise in interest rates has made homes virtually unaffordable. I don't know if I believe that. That I actually just stole a trick right out of the Doom N Gloom Media's playbook. That's what they would have you believe, right? So interest rates have no doubt risen. In fact, they've risen probably 3/4 to almost a full point from just this past August. So rates have certainly risen. And if we just followed the Doom and Gloom media, we would all just be thrown in the towel, especially if we're considering buying a home, right? We're thinking, oh my gosh, rates have risen 1/2 point or 3/4 of a point. I can't afford a home anymore, so I'm just going to throw the towel in. But if we take it out of context and just leave it at that, rates have risen, then yes, that's as the Doom and Gloom media like to do, that's going to strike some fear into us, and it's probably going to sell them some newspapers or increase their followers. But if we put things in perspective, we'll quickly realize that that's not the difference between qualifying, and it's not the difference between can I afford this house anymore. So just to put things in perspective, and I'm going to focus primarily on the Dallas-Fort Worth area today because that's where I live and work and play, and I know the numbers really well. But this is applicable nationwide. Okay, using a 10% down conventional loan on a median-priced home in the Dallas-Fort Worth, Arlington metro, which is around $354,000 and some change, that would yield a loan amount of $319,000 and some change. I think it's $319,410 to be exact. For every 1/8% rise in interest rate, so for example, going from 3% on a 30-year fixed to 3.125, that's 1/8, or going from 3.125 to 3.25, that's another 1/8 of a point. For every 1/8 of a point increase in interest rate, that increases the monthly payment, principal and interest payment, by a whopping $22 a month. So even a 1/2 point increase based on that scenario, we go from 3% interest rate to 3.5, that increases your mortgage payment about $88 a month. I don't think that's enough to disqualify someone or discourage someone or a family who's looking at buying a home. It's just not that great of an impact, or it's not as great of an impact as the media would have us believe. Now, to take it one step further, let's talk about the cost of waiting. And I'm going to use real numbers, so let's focus back to August of this past year when the median priced home in the Dallas-Fort Worth metro was $337,000 and some change. Then we fast forward today, as of the end of December, and the median priced home was $354,000 and some change. So you've got a nice 5.3% increase just in the median home in about a 6-month period, right? Let's also look at interest rates. So interest rates, and this is according to Freddie Mac's primary mortgage market survey. You can Google Freddie Mac PMMS, and it'll pull that up. You'll see a historical average of interest rates. Looking at August of this past year, according to Freddie Mac, the average interest rate was 2.77%. Okay, now there might be some points associated with that, and you can see that information on Freddie Mac's site. But the average rate was 2.77%. Then fast forward to the end of December, the average interest rate was 3.56. So there's a nice 3/4 of a point rise. So if we factor in the appreciation in homes, so homes got more expensive, right? They appreciated in value. The median price home from $337,000 to $354,000, and we also combine the rise in interest rates from 2.77% to 3.56%, that does begin to impact monthly payment more so, because your loan amount is going to be slightly higher. Property taxes might be a little bit higher. Mortgage insurance might be a little more expensive because the loan amount's a little bit higher. So all of those forces combine to increase monthly payment on average in that scenario, $246 a month. So if we just look at that, we're thinking, wow, that's huge, right? It's not chump change. A $246 a month increase in anything is you're going to feel that a little bit, right? But it's still, in my opinion, not enough to disqualify someone or discourage someone from shopping for that perfect home for their family. In August, if using my estimates for property taxes and homeowners insurance, factoring in mortgage insurance, and then the mortgage payment, principal and interest portion, if I add all that up together based on an interest rate of 2.77 and a purchase price of $337,000 and some change with 10% down, that yielded an estimated total monthly payment of $2,078 a month. Fast forward to December, and we've got a higher priced home, as mentioned, $354,000 and some change, and a rise in rates from 2.77 to 3.56. So if I add all that up together and include, again, estimates for property taxes, estimates for homeowners insurance, mortgage insurance, all of that together, you've gone from $2,078 a month to now an estimated $2,324 a month, about a $246 a month increase. That's about 11.8% increase in payment. Still pales in comparison to the 17.1% increase in average rents, just to mention, right? Now, if we also look at one other thing to really kind of put this into perspective, median income in the Dallas-Fort Worth, Arlington metro is $75,839. Divide that by 12, get a monthly breakdown, and the average monthly income, gross income, is $6,319 a month. So that $246 a month increase represents only 3.8% of that gross monthly income per the Dallas-Fort Worth, Arlington metro median income. So again, to put things into perspective, yes, rates have risen. Yes, home prices have risen. But if we take our focus off of rate, and if we ignore the talking heads, the Doom and Gloom media, we'll realize that it's still affordable. If you have any questions at all, please feel free to reach out to me. I'd love the opportunity to help. Have a great day.